Hello everyone. Today I'll be discussing statement of cash flows. Everybody knows that statement of cash flows form a very important part of the CMA syllabus. It comes in part 1 basically, right? So, what do they test you in the statement of cash flows? First of all, we are going to do as per US GAAP. We are going to prepare the cash flows as per the US GAAP. Fine? So, we are classifying the cash flows as per US GAAP and not as per IFRS. There's a difference. There's a huge difference between US GAAP and IFRS where the classification is concerned. So, we will discuss only US GAAP in this class. Fine? So, under the indirect method, you are going to start with the net income and then arrive at your operating, investing and financing cash flows, right? So now we are going to discuss the items that will be classified under the operating cash flows. Fine. Some are quite obvious. Cash sales, for example, is going to be classified under operating. Fine. And the salaries that you pay will also be operating. Depreciation is added back to the net income as it's a non-cash outflow. Okay, it's a non-cash item, so you're going to be adding it back to the net income. Fine. So this is quite obvious. Then what comes under investing? Under investing, if you're selling your fixed assets, it will feature here, right? You are buying plant and machinery. It will come as an outflow under investing. And you are making an investment in shares or bonds. If that is not the core business of the company, it will be classified under investing, right? So these are the items which will be classified under investing. That's quite obvious. Then comes the financing. What is going to be classified under this head? Issue of share capital. Issue of share capital, issue of bonds, right? And notes payables, payment of notes payable. All those items will come under the financing activities. Okay. Now, for the not so obvious, interest paid to bondholders. Okay? Interest paid to bondholders. Logic will tell you that it should be classified under financing because issuing of bonds is classified under financing. So interest logically should come under financing. But US GAAP classifies this item under operating cash flows. Okay, I'll come to the logic behind this a little later, but bear in mind that under US GAAP, interest paid to bondholders is classified under operating cash flows. Fine. Now, dividend received on investments. Obviously, you feel that dividends received from an investment should be classified under investing because when you invested in the shares, it would have featured under investing under the investing cash flows. Okay. So obviously you feel that the dividends should be also classified under investing. But under US GAAP, the dividends received, pardon my spidery handwriting, so the dividends received will be classified under operating cash flows. Fine? Okay. And now, what about dividends paid? Dividends paid to shareholders, to the company shareholders. Dividends paid, you should think, if you think about it logically, when you issued share capital, it was classified under financing. So similarly, dividends paid should also be classified under financing. And here you are correct. Okay? So dividends paid to own shareholders will be classified under financing activity and not operating. Fine? So, these are the main classifications of cash flows which cause confusion. Okay, now, interest received on investments. Fine, interest received on investments. So when are you going to receive interest on investments? When you're invested in a bond, right? When you're invested in a bond, you receive interest on those bonds. So where will you classify that interest? Logically, you feel it should be classified under investing, but under US GAAP, interest received will be classified under operating activities. So if you see a common thread here, that anything debited or credited to the income statement stays in the operating section under US GAAP, right? There are some exceptions which we will come to later, but if you notice that interest paid will be debited to the income statement, right? Interest paid will be debit interest, credit cash, or debit interest, credit any accrual account. Okay, so since it is going to be debited in the income statement, it stays in the operating section of the cash flow. And similarly, interest received on investments will be credited to the income statement, so it remains in the operating section of the cash flow. Okay, you are not going to classify it under investing. And dividends paid to own shareholders, if you notice, it is not debited to the income statement, right? What's the entry for dividends paid to own shareholders? At the time of declaration, you will debit. By the way, I write debit as DT, so don't get confused. Debit retained earnings, and you will credit a liability account, which is a dividends payable account, right? And thereafter, at the time of payment, it will be debit, dividend payable, credit, cash or bank. Fine. So if you notice, we are not debiting the income statement for dividends paid to own shareholders, right? So that's the reason this is classified under financing activities. Fine. So the remaining, whichever are going to be debited or credited in the income statement, is classified under operating. So this is a way of remembering what are the items which will feature in the operating cash flows in US GAAP. Is that clear? Right. Now comes the preparation of the cash flow. How do you prepare a cash flow? First of all, let me tell you, a cash flow is a reconciliation between your income statement, and the cash in hand, right? Because under the indirect method, you are going to start off with the net income and arrive at the cash, right? So what are you going to do here basically? Sometimes it may so happen that you have an income of 100, let us say 100, but you don't have any cash. Or you are having plenty of cash, let us say 1,000, but you are in a loss situation. Okay, it happens quite often. Sometimes at work my boss asks me, okay, we are having a loss this time, but you are showing we are having a lot of cash, so this loss may not be correct, right? So that kind of situations can be best answered by preparing the cash flow statement. Okay, an example of having a loss and cash in hand can be depreciation. If you notice, depreciation, the entry is going to be debit depreciation and credit accumulated depreciation. Is it not? So let us say some figure 100. If you notice, there is no cash outflow with this entry, but however this entry, this debit will bring down your income. So you will have a loss without an outflow of cash. So let us assume this was the only entry in the year. Okay, you didn't do any business. Let us assume that you only passed the depreciation entry. So now what will you have? How will your income statement look? Your income statement will show a loss. So you will have a net loss of 100. right? Because of that depreciation entry. But there was no outflow of cash. So if you want to arrive at your cash balance, which let us assume your cash balance is 0. Okay? So if you want to arrive at your cash balance, you need to add back your depreciation because it reduced your income without an outflow of cash. So you add back your depreciation and arrive at the cash flow, which is 0. So this is how from the income statement we are arriving back at the cash flow, cash balance, by adding back non-cash expenses. One more example for a non-cash expense would be bad debts provision. So what is the entry for a bad debts provision? Debit bad debt expenses, let us say 100 again, and credit allowance for bad and doubtful debts 100. Okay, so now this entry also does not have a credit cash here, right? So there is no cash involved, but expenses are increasing and income is going down, right? So if this was the only entry for the year, you would have had a net loss of 100, right? And a cash of 0. You can never have a cash as a minus or a negative quantity. Okay, it should either be 0 or a positive quantity. So what do you do here? You add back your bad debt expense in the cash flow statement, right? And arrive at your cash balance, which is 0. Okay, so these are the adjustments what you are going to make for non-cash expenses. Fine. The remaining items, which is called the changes in working capital, will be discussed in the next section. Thank you.